So let me start with you, Mr. Dimon. You are the star of the overdraft show. Your bank, JP Morgan, collects more than 7 times as much money in overdraft fees per account than your competitors. So, Mr. Dimon, how much did JP Morgan collect in overdraft fees from their consumers in 2020?
Well, I think your numbers are totally inaccurate, but we'll have to sit down privately and go through that.
These are public numbers.
And I also want to point out we did not overdraft.
Can you just answer my question?
We
How much did JP Morgan collect?
We did not overdraft at the Fed account. And at any request,
so you never.
Said they needed,
I'm sorry,
they needed
Mr.
COVID
Dimon.
relief.
That was Mr. Dimon. That was not the question.
On request.
Did you had an automatic protection? So I'm asking. You were recommended, the regulators recommended you offer that same kind of protection to your customers.
And
how much, in fact, did JP Morgan collect in overdraft fees from their customers in 2020? Do you know the number?
I don't know the number in front of me. But
well, I actually have the number in front of me.
It's
$1.463 billion. That's nearly $1.5 billion that you collected from your customers. Now, do you know how much JP Morgan's profit would have been in 2020 if you had followed the recommendation of the regulators and waived overdraft fees to help struggling consumers? In other words, without that overdraft money, would your bank have been in financial trouble?
The fees for customers upon request if they were under stress because of COVID.
You know, I appreciate that you want to duck this question. Do you know how much your profits would have been if you'd actually waived all the fees as the regulators recommended?
We waived the fees every time.
The answer is your profits would have been $27.6 billion. I did the math for you. So here's the thing. You and your colleagues come in today to talk about how you stepped up and took care of customers during the pandemic, and it's a bunch of baloney. In fact, it's about $4 billion worth of baloney, but you can fix that right now. Mr. Dimon, will you commit right now to refund the $1.5 billion you took from consumers during the pandemic?
No.
Right now?
No.
All right, today is Wednesday, May 26th. This is a recap for the stock market activities today. Let's get it out of the way and talk about this piece of shit, Jamie Dimon. I've already made a video about this guy, so go back and watch it. It has all the information you need about the money laundering and the rigging of commodities and stealing from the PPP loan program, all the bad behavior that JP Morgan Chase Bank got involved in. I mean, is this a bank or is it a criminal organization? Al Capone is looking from his grave, wishing that he thought about this racket instead, because this racket is funded and protected by the federal government. And this guy, Jamie Dimon, you know, he takes a knee and he pretends to be woke, Black Lives Matter, etc., etc. But in reality, back in the housing crisis, who was evicting black families out of their homes and foreclosing them? It was Jamie Dimon and his banksters' friends. And by the way, don't you think that a lot of families, black and otherwise, could use some of that money that Jamie Dimon stole from them by charging them overdraft fees during a pandemic? I mean, how much is enough for JP Morgan? Remember, JP Morgan made billions and billions of dollars from processing the PPP loans, which pretty much was the government refunding taxpayers' money back to the taxpayer. Why does JP Morgan gets to charge a service and an interest fee for returning the taxpayers' money from the government back to the taxpayer. But they made billions anyways. So this was part of the story today. We saw banksters, the bosses of the different crime organizations running the financial system in this country, aka banks, testifying in Washington, D.C. But the other part of the story was regarding the market itself. We saw the rise of meme stocks. The sheepies are back. You know, the Robin Hoodians and the likes who buy first, ask questions later. Somebody spits the ticker. They come out running Naruto style, heads first, right to the massacre. And of course, they are motivated by greed. They're not traders. They're not investors. They're not even gamblers. They're zombies high on meth, looking for the next score. Somebody spits the ticker, says, hey, AMC is about to pop higher. GameStop is about to pop higher. And they chase it anyways. And even when they make money, your goal was to score. You scored. You made 19, 20% in a single day. Time to get out, right? No. This new generation of investors, you know, the SPAC generation, believes in hoodling and to the moon, bro. Diamond hands. They believe in buying and waiting forever till the stock goes to the moon. And of course, Wall Street is laughing in the background. While these morons continue to say, we are the captain of the ship right now. We're sticking it to the suits in Wall Street. Meanwhile, all of what they're doing is making Wall Street richer because Wall Street rides the ride higher along with these morons, and then they dump and they short at the top, and they get to collect all of the money that the sheepies made in a few days. You saw that happen with the mania names, the EV stocks, solar stocks, plug power, NEOs, etc., dropping 50, 60, 70% from the highs. You saw that from SPACs. You saw that from the first episode of the rise of meme stocks. Rise and fall, and we are now seeing it in cryptos. So once again, these people will never learn. They have all kind of examples right in front of them. You don't have to go all the way back to 1999. You just have to look back a few weeks ago. Take a look at what happened to SPACs, for example. But again, they're going to continue to do what they want to do, which is pretty much chasing every score until they lose their money entirely because they're not investors. And we saw meme stocks / the mania stocks, the high multiple stocks, all rising higher significantly today. The sheep portfolio is overperforming the quote-unquote suits portfolio. You know, the portfolio that has companies with actual profits. But according to the new generation of investors, quote-unquote investors, who needs profits? Profits are for boomers. We are the future, bro. We invest in garbage companies with no revenue, no profits, no prospects of growth whatsoever. We're only hoping for a mechanical squeeze, whether it is gamma or a short squeeze, and this is how we invest. Good luck. But once again, ignorance is a bliss. And the retail participation in the stock market, historically speaking, has been the best thing that ever happened to Wall Street because they get to make the money during the mania when stocks are riding higher impulsively. And of course, the retail crowd think that they're smart, they're getting rich, they start quitting their jobs, they buy luxury cars, etc., etc. And then the quote-unquote suits, the Wall Streeters, they dump and they short at the highs and they become filthy rich, meaning that the retail participation in the market is pretty much a vehicle of wealth transfer from dumb money to smart money. Now, you and I are retail traders and investors, but we are smarter than the sheepies because we think like the insiders, we think like the Wall Streeters, we play these pops higher via options trades, etc., etc. But we also wait for the mania to top and then we ride the ride to the downside, making a ton of profits when the sheepies get slaughtered. And by the way, the other point is, what will happen to cryptos now? Because it looks like cryptos are bottoming and they are primed for a pop, an oversold bounce at least. But the problem is, if the meme investors are migrating from cryptos back to meme stocks, that is not going to help cryptos. So we have to wait and see how far will this episode of the mania in meme stocks will take us. Lastly, in my notes, while everybody was paying attention to the meme stocks, AMC, GameStop, BlackBerry, in my opinion, the action was in yields and the US dollar. Yields look like they're bottoming because we saw the 5-year auction. This is the auction for the 5-year note. The auction was much better than expected, and even with that, we saw yields reversing higher once again. Likewise, the US dollar also rising higher, perhaps forming a bottoming process in anticipation of macroeconomics data. We're about to receive important data starting tomorrow regarding inflation, and it will be decisive once and for all. Will the Fed's transitory argument win? And if that is the case, yields will collapse and you will see stocks rising across the board, specifically the mania names, the Nasdaq, etc. And the opposite is true. If we receive data signaling that inflation is not transitory, then yields will pop higher and that will resume the pain in the Nasdaq, the mania names, but perhaps we will see a bottom in the inflationary trade. The inflationary trade has been going through a correction. Will it be over as we receive more data? Or, and here's the problem by the way, suppose we get a piece of data showing that inflation is not transitory and it is much worse than expected. The assumption is Nasdaq goes down, the dollar pops higher, yields pop higher, and the inflationary trade pops higher. That is the assumption. But what if the market decides to throw a taper tantrum? Because if inflation is worse than expected, then tapering will happen sooner than expected. And by the way, we talked about that in details in prior videos. How the market will react if it decides to concentrate on inflation, or how would it react if it decides to concentrate on the tapering. So go back and review those videos. But for now, I got a market to cover, and here we go. The Dow Industrial Average closing in the green by 10.59 points, or a gain of 0.03%, pretty much at the flat line. What about the Nasdaq? Closing in the green by 80.82 points, or a gain of 0.59%. The S&P 500 also in the green by 7.86 points, or a gain of 0.19%. The outperformer of the day was actually the Russell 2000, and the reason is we saw the mania names, the meme stocks rising higher significantly, along with the reopening trade. These are two major components for the Russell 2000. When they trade higher, it is not a surprise that the Russell 2000 is outperforming today. What about the sector's performance? Leading the pack at number 1 and capturing the gold medal, consumer cyclicals. At number 2 for the silver, energy. The number 3 for the bronze, communication services. Pretty much every single sector of the market closed in the green, so we're not going to shame any sector. What about the advanced decline ratio? The NYSE 74% advancing versus 23% declining. The Nasdaq 76% advancing versus 21% declining. What about futures? Muted activities for crude oil futures. Meanwhile, the correction looks like it is resuming for lumber futures and softs. Lumber futures down for another day. Likewise, it was a down day for sugar and cotton futures. Meanwhile, the laggards for the year, coffee, OJ, coca futures, all gaining significantly. And of course, a lot of you brought up the point that China is cracking down on commodity traders. China has a huge interest in keeping commodity prices lower because they are the driver behind the demand. Cheaper commodities means good news for China because they're hoarding commodities across the board, whether it is steel, aluminum, copper, grains, meats, all over the place. China has a vested interest in keeping those commodity prices lower. What about metals? We saw yields popping higher today along with the US dollar, and therefore gold is flat but silver is declining, along with palladium futures also closing in the downside. Meanwhile, platinum futures closing flat. On the other hand, copper looks like it is bottoming and it is preparing for a rally higher. The problem for copper is when yields pop higher, signaling higher inflation, that is good for copper. Copper tracks inflation. The problem is if this upcoming pop in yields will be accompanied with a pop in the US dollar, remember, copper doesn't like a higher US dollar, like the majority of commodities, by the way. But if the dollar is about to pop higher, copper will have to wait the positive tailwind of inflation expectations rising higher in the form of yields popping higher, but on the other hand, it has to weigh in the headwinds from the US dollar popping higher. What about meats? Declines across the board. Lean hogs, feeder cattle, live cattle futures, all losing about 1% or so today. Likewise, grains are down overall, with exception of oats and corn futures perhaps forming a bottom here. These two suffered massive declines in the last few days. But the pain resumed for canola, wheat, soybean oil, soybean meal, and soybean futures, all closing down today. And of course, mind you, there is this battle, and we talked about this in prior videos, the battle between the oversold and overbought conditions in the market. Oversold securities and assets are bouncing higher. Overbought stocks, commodities, etc. are being sold off. Guess which camp commodities fall into? They fall into the overbought camp, and therefore we are witnessing a correction in the commodities market. But again, was that the top, or will it be another dip to buy and we will see higher prices in commodities later in the year? That, of course, will depend on the economic data we are about to receive. Moving on to the options market, the big casino. What's going on here? They're back. The mania is starting to creep back in the market, evident in the performance of meme stocks, chiefly AMC and GameStop. Now, the mania is not at the same level that we have seen earlier in the year, and that raises the question about the sustainability of this pop, because the last pop in GameStop and AMC had a lot of momentum and participation behind it. This time around, the assumption is the momentum, the participation, even the short covering is not going to be as extreme as before. And the more ridiculous the mania gets, the closer we are to a top. In this case, AMC leading the day in the options market by about 1.5 million contracts. This is absolutely insane. Pretty much double, more than double, the volume traded for the biggest stock in the world, Apple. This is complete insanity. Of course, everybody's trying to score big, fast. They're buying weekly call options, expiring in 2 days. Some will win, but most will lose. In this case, we had 1.5 million contracts, and about 67% of those were calls. And here it is. Ford at number 2. Ford is becoming a meme stock now, and you guys know that I have a large position in Ford in my portfolio. I started buying the name earlier in the year. Matter of fact, I made a recommendation of switching from GM to Ford last December, and this is exactly what I did. And now that Ford is turning into a meme stock, I'm not complaining. Once again, ignorance is a bliss if you know how to use it. And in this case, all of what I'm doing is selling upside calls way out of the money and cashing in an enormous amount in credit, because the meme stonkers are chasing these cheap options, and you're usually going to find those in lower price stocks, the likes of AMC and Ford. Anyhow, Ford at number 2 with about 1.3 million contracts, about 77% of those were calls. At number 3, Apple, no love for Apple, muted, no activities whatsoever, only 700,000 contracts traded today for the name, about 74% of those were calls. And right away, you're seeing the meme names, Sundial Growers. We've been there before. I played this one, by the way. I bought the stock last time around, and I dumped exactly at the price of $4.20 during the pre-market for SNDL. Surprise, surprise, the top at $4.20 for a wheat stock. The donkeys are very easy to read. You can make a lot of money utilizing these donkeys to make quick gains. Unlike the hoodlers and the mooners and the diamond handers. Anyhow, you see BlackBerry on the list. This is another meme stock. GameStop, all of these meme stocks are seeing a significant surge in activities today. What about the unusual trades that took place in the options market today? Let's start by, you guessed it, AMC. What else? And by the way, I understand that this is not a retail traders and investors story. This is just part of the story, and we talked about this in details before. These are games being played between hedge funds. Hedge funds that are shorting these stocks get beaten down by rival hedge funds who figure out the margin calls, the important dates for covering, and they decide to start a short squeeze to make rival hedge funds pay. And they utilize retail traders to do the bidding for them. Immediately you see the forums on Reddit and the quote-unquote influencers on YouTube, the likes of Meet Kevin, Zip Trader, etc., pumping AMC. AMC is about to pop. Who told you that? And of course, they hop in, they see a pop in a day or two. AMC is up 10%, then it's up 20%, another 30%. Now they start to hop on the trade a little too late. And of course, the hedge funds already achieved their purpose. They made millions of dollars quickly, and now they get out of the trade they dump on the chasers, the Johnny-come-latelys, who end up becoming hodlers and diamond handlers, etc. This particular trade is a put trade. This is a bearish bet that AMC is perhaps stopping. And if you notice, the put options for AMC, specifically the $10 put with the expiration date of June and July, these put options actually increased in value by the tune of 30% or more, even though the stock itself was up about 20% or so. And the reason behind that is the phenomena of Vega. Vega tracks the volatility of the underlying stock. And if that is increasing, option premiums also increase in value, specifically puts. In essence, options traders are betting that this pop is transitory and AMC will collapse again. And by the way, we saw the same phenomena. Some of you old subscribers remember my GME trade, my GameStop trade during the first episode of the Mania. As the stock started popping, I bought, I believe, the $15 or $10 puts expiring in a few months. Right away, the very next week, GameStop popped 30% in a single day. But those put options exploded in value, tripled, quadrupled in a single day, even though the stock was rising higher. And the reason is, traders were betting that the pop will be temporary, and you will see the stock falling back to earth again. And this is exactly what happened. So we will see what happened this time around with AMC and GME. But for this trade, they are picking a short-term top because the expiration date is this upcoming Friday. So they have 2 days for this trade to work. And therefore, they're not committing a lot of risk. They're using a spread. They are buying the 18 puts expiring this Friday, and they are selling the 17 puts. In the process, they paid about $1 a piece for the 18 puts, and they received about 16 cents a piece from selling the 17 puts. All in all, the total entry price for this trade is about 40 cents a piece, bringing the total for this trade at about $1.2 million. What about the trade for the ticker ARKK? This is for ARK Invest. You know who. This time around, they're making a bullish call, a big one, by buying the 130 calls expiring July 16th, with expectations that the name will pop over 17% by then, and they paid about 90 cents a piece to enter this trade, all in all, bringing the total to about $1.7 million. What about the trade for the ticker BB, BlackBerry? Another meme stock that happens to pop today. BlackBerry is playing catch up with AMC and GME because these have been popping for a while now. So perhaps there are some traders who are saying, wait a minute here, I am too late to AMC and GameStop. But if we are seeing a revival of the meme stock phenomena, then how about I buy BlackBerry instead? A name that hasn't popped yet. We'll see if this is smart or not. But remember, last time around, I called the top in BlackBerry because Mia Khalifa issued a video. She started screaming and yelling that she's buying BlackBerry. Buy, buy, buy. And that was the top right there.
Is cracking down on the Robinhood thread. So I will be your new Robinhood thread. We are buying BlackBerry. Bye, 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 bye.
So perhaps this is another signal that we have to wait for to call the top for this episode of the Mania. Watch out for porn stars' Twitter accounts. If they start pumping meme stocks again, we're getting very close. Anyhow, for this trade, they're buying the $10 call. Expiration date July 16th. This is interesting because it goes a little longer. The people betting for AMC and GameStop, they're betting for a short-term pop. This traders are betting for a prolonged pop all the way till July for BlackBerry, and they paid about $1 a piece to enter this trade, all in all bringing the total to about $1 million. What about the trade for the ticker LIZI? This is another garbage Chinese name. Who cares what they do? Another Archegos kind of name that popped about 50% today, and they're betting for more gains to come. By buying the 7.5 calls, expiration date June 18th, with expectations that the name will rise over 10% by then, they paid about $1.70 a piece to enter this trade. All in all, bringing the total to about $1.3 million. Lots of trust fund babies playing with daddy's money. What about the trade for the ticker LVS? Not the first one on the table, by the way, but the second one, the put options trade. LVS is for Las Vegas Sands. They're buying the 52.5 put options with the expiration date of July 16th. They are expecting the name to drop over 11% by then. They paid about $1 a piece to enter this trade. All in all, bringing the total to about $700,000. What about the trade for for the ticker OLLY. This is for Ollie's, bargain outlet, wholesale, whatever. It's a bargain store that happens to be reporting earnings tomorrow, and they are playing an insurance policy here, or perhaps betting for a drop after earnings for this name by buying the 75 puts, expiration date June 18th. With expectations that the name will drop over 7% by then, and they paid about $2.25 a piece to enter this trade. All in all, bringing the total to about $1.5 million. Doesn't seem like a bargain here. $1.5 million. Anyhow, what about the last trade we have at the bottom of the table for the ticker GLD? This is the gold ETF. Perhaps gold is topping now that the dollar and yields are reversing higher. This trade makes a lot of sense to me because they're buying the 176 puts, expiration date August 20th, with expectations that the name will drop over 6% by then. They paid about $1.50 a piece to enter this trade. All in all, bringing the total to about $1 million. I'm not that bearish on gold. I don't think it will decline all the way till August, but the trade makes sense. It gives you plenty of time to work, and it is reasonably priced. And therefore, why not take a longer expiration date, in this case August, but the scope from the trade is a short-term top play for gold. Moving on to the heat map analysis. And right away, we can see that this was a good day for the mania trade, the high multiple trade, but not the overall and broader NASDAQ. Because bear in mind that yields managed to catch a double bottom and reversed higher, and therefore the mature names in the technology sector, the likes of Microsoft, Apple, etc., were more conservative today and did not celebrate along with the meme and mania stocks. There are two ways to view this. Number one, the hedge funds that are short covering in AMC and GameStop are doing that by liquidating some of their holdings, and they are concentrated in names like Apple, Microsoft, Amazon, Facebook, Visa, and therefore we saw underperformance from these names. The other explanation for the underperformance from these names is the following. What if yields are bottoming and they're about to pop higher tomorrow as soon as we get more inflation and macroeconomics data? Because the bulk of the gains today came from the mania names, the high multiple names, the likes of software stocks, solar stocks, EV stocks, ARK Invest type of names, the Chinese names that nobody knows anything about, but bros on the internet and TikTok keep telling me that this company is the future, bro, and you don't understand. Those kind of names managed to outperform today. So all in all, this was a win for retail investors and traders. These are the names that they love and invest in, and they are popping higher today. And therefore, we're asking the question, are we witnessing the comeback of retail investors and traders into the market again? Or will this be just another transitory event? What about the inflationary trade? When we talk about energy, materials, industrials, financials, they look like they're stabilizing. We saw huge losses in these names the last few days, but today it looks like these names are bottoming and readying for a pop higher. So the bottom line is this. We have two markets. We have the adult market, and the adult market is saying, watch out here. It looks that yields are bottoming. We have more macroeconomics data coming up, and therefore we're pushing the brakes for the NASDAQ and short covering in the inflationary names, perhaps buying the dip in these names. And likewise, you see yields stabilizing in the bond market. This is the adult market response. But we have the juvenile market of the memes and SPACs and the cryptos, cum rockets, etc. And this market is living in different land. The moves in the currency and bond market, that doesn't matter to them, nor does the upcoming slew of economic data. Thus, we have two markets. What about the themes analysis? Starting with the reopening trade. The dip is being bought across the board, whether we're talking about reopening stocks related to retail or services. And of course, the pop in these names pushed the XRT higher, and the XRT happens to be one of the biggest components in the Russell 2000. The names within the XRT are a big component of the Russell 2000. What about the inflationary trade? We're seeing some bottoming process here, but it is too early to confirm these moves. For example, we saw a lot of pain for a name like Alcoa. Today, the name is rebounding higher by the tune of 4%. Likewise, we saw a lot of pain for a name like CarMax, and this name is rebounding higher today. So are we seeing a bottoming process in the sell-off for the inflationary stocks? This is what I am watching for the remainder of the week. What about the deflation stocks? It's a party across the board, big gains specifically for the high multiple names: Square, Zoom, DoorDash, Peloton, Snapchat, Shopify, and Okta are the exception here. And the question is the meme stock mania a signal for the comeback of the retail investor and traders' participation back in the market? And if that is the case, will the participation be broader than just the meme stocks? Will they go back and buy the dip in their other favorite names, the likes of DoorDash, Snapchat, Peloton, Snowflake, Plug Power, etc.? Because I have already played these oversold bounces in the mania names, and I'm done with that. I've closed the majority of my oversold trades. So the question is, did I close too early, or are these retail traders and investors hopping on the trade a little too late, the Johnny-come-lately situation? We will see. If they are wrong, they will lose money. If I am wrong, I will not lose anything. That is the beauty of profit taking. And by the way, the main pillar of investing is booking profits. So if you're a hoodler waiting for the moon with your thumb in hands, what are you doing here? Moving on to charts. Starting with the 30 minutes chart of the SPY. Nothing new here, consolidating between the resistance of 420, which is too high in my opinion, and the support of 417.30. So far, this is a bullish consolidation, signaling that the next move will be higher to break the resistance of 420. That will all change if the SPY breaks the support of 417.30. For now, we don't have this signal yet. Zooming out, daily chart for the SPY's futures, the continuous contract. The negative divergence in the RSI is still here, but it is close to being corrected and fixed. If that is the case, then the momentum will turn positive, and that will be enough for the SPY, the S&P 500, to reach all-time highs. Likewise, we have an imminent crossing in the MACD indicator, printing green impressions on the histogram, and that will be an indicator that the momentum has turned positive. That is the confirmation. The RSI is a leading indicator. The MACD is a lagging indicator. We use the MACD as a confirmation for the move in the RSI. For now, the target remains 4,232. This is the resistance, but looking at the chart, all in all, you cannot be bearish on this chart. Every single indicator is pointing that the SPY will pop higher, from the momentum indicators to the volume to the breadth to the candlestick pattern. Everything is pointing the SPY will pop higher. But there are other analysts that are calling a bull trap. One of those is Sven Henrik, among others. And that will be indeed a bull trap, because every single indicator is telling me the next move will be higher. So if the chart starts to reverse lower, that will be indeed a bull trap. And I will be able to spot that right away, looking at the negative divergence in the RSI. If that starts to curl downward once again, then perhaps the negative divergence will persist for a little longer. What about the Qs? 30 minutes chart. Nothing is going on here. Consolidation, bullish consolidation. Nothing is wrong here in this chart. The next resistance remains 340. But this 335 level is proving to be a soft resistance. It coincides with a prior gap which the Qs struggled to close. It is now closed, and we are just waiting for the pop higher. You cannot be bearish on this trade, picking a top, because the reversal signal will be breaking the support of 330.5. But that alone will not be enough. You have to wait for the reaction at the gap below 330.5. Will that be closed and the chart reverses higher, or will the Qs struggle to rally after closing the gap? So for now, the bulls have the advantage from the 30 minutes perspective. What about the daily perspective? The Nasdaq futures, the continuous contract. The bulls also have the advantage because we have a positive divergence in the RSI. We have a positive crossing in the MACD indicator for the Nasdaq, and the chart captured and retested 13,599 for support. You can round that up to 13,600. Doesn't matter to me. But the next battle is 13,718, which happens to be the top of the reversal candle. The chart is struggling to break above that level, but so far we're not seeing any give up, any weakness, saying perhaps the Nasdaq is not ready to break above 13,000 718. So once again, looking at the chart, who has the advantage, the bulls or the bears? Clearly the bulls. And therefore, if we start to reverse for any reason, starting tomorrow, say yields pop higher because of the macroeconomics data regarding GDP, if that is the reason, that will indeed be a bull trap, a classic bull trap, because all of the market indicators, technically speaking, implying a higher move across all indices. What about the IWM? Small caps, the odd performer today, 30 minutes chart, recapturing the resistance now support level of 223. If we continue to see the gamma squeeze, short squeeze, whatever you want to call it, it's probably a combination of both in GameStop and AMC for a few more days, while the reopening trade holds, the XRT holds, you will see the IWM climbing higher. But what is the threshold here? For that, we switch to the daily chart of the RUT, the Russell 2000. The momentum indicators, the RSI and the MACD indicator, are pointing that the momentum is starting to change from bearish to bullish, and that gives the bulls the advantage. But we still have a potential for a bear flag, and we are waiting for the weekly closing. Above 2,264, the bulls have the advantage. Below that, the bears have the advantage. Therefore, once again, here is another chart giving the bulls a clear advantage. Therefore, a reversal tomorrow or starting next week will indeed be a bull trap. What about the Dixie, the dollar index? Here it is. Will this be it? Will this be the pop that I've been talking about for a while now? And I've been wrong day after day. The dollar continues to slide lower and lower and lower. But it looks that this time around, the bottoming process is a little stronger. And if what I am anticipating is coming, the US dollar should be able to pop all the way to 91, if not higher than that level. And that will come hand in hand with a market sell-off. What about gold? If the dollar is bottoming and yields are also bottoming, then perhaps the top for gold is here. And of course, we are talking about a short-term top because the weekly charts remain positive. Gold is overbought severely, matter of fact, from a daily perspective. And remember, the big reversal for gold last year, around August, summer of last year, happened from a similar RSI level. What about yields? This is the most important chart to watch because the support at 1.55 basis points, it looks this is holding and we have a double bottom formation. We had an excellent 5-year note auction and that still did not phase yields to go down. Yields popped higher. And the question is, will the next slew of economic data support yields to recapture 1.622 basis points as support? If that is the case, will that be enough? Case closed. Transitory my ass. Will that be the case? Because if it is, then yields will rally far beyond the resistance of 1.622 basis points. What about the TLT? I am watching the weekly chart. This is the one that matters to me. The oversold technical conditions are being worked, but they're not resulting in a big massive pop in the TLT. We talked about certain stocks, the likes of Plug Power, Fuel Cell, etc. These oversold pops were massive to the tune of 50% or more. Now, I'm not expecting a 50% pop in the TLT, but if there was conviction in the oversold bounce, working out these technical oversold conditions, and the potential of triggering a short squeeze in the TLT. Hey, Wall Street bets and sheepies, you want to create a short squeeze? Give the TLT a shot. But again, if there was a high conviction that inflation is transitory and yields will drop lower, then these oversold conditions in the TLT should have resulted in a massive pop. We're talking 3, 4, 5% for a few days or so. All in all, we can see 10 to 20% pop in the TLT. That is not happening. The TLT is struggling to break higher. Too early to make a final judgment, but for now, not looking so good for the TLT. What about the VIX? Talk about not looking good. The VIX, with an ugly closing today, the action in meme stocks did not phase the market. We did not see a sell-off in the broader market in response of short covering in the mania names, which also, by the way, another signal that this pop in the mania names will not last for too long. It is way weaker than the last pop. But here, once again, we're watching the weekly closing for the VIX. Closing below 20, that will be a confirmation that the SPY, the S&P 500, will reach higher highs, meaning all-time highs. And once again, if these other technical analysts who are calling for a bull trap are right, then this will be the ultimate bull trap. Because look at the weakness the VIX is displaying. Anybody looking at this chart will assume that the weakness in the volatility index is an indicator that the stock market is about to have that rip your face rally. We will see. What about Apple? Nothing is going on here. Flat, consolidating, just like the NASDAQ. Nothing is going on in Apple. What about the souffle? What's going on here? Some action for the souffle, a decent day, a decent pop higher, and the souffle will face the first test very soon, by the way. The 629 resistance level. If that is broken, we're looking for 679. All in all, looking at this chart, the momentum indicators are turning positive. And remember, a lot of oversold bounces already took place, or rather started to take place 2 weeks ago. I made a video 2 weeks ago talking about the potential for oversold bounces and how to exploit that opportunity by buying call options. We saw names like Plug Power, DraftKings, etc. popping significantly higher. But for some reason, Tesla was lagging. Tesla was displaying weakness. So is that lagging response playing out now, where Tesla also gets an oversold bounce? And if that is the case, the bounce could take us indeed all the way to 679. But we'll take it one day at a time, because we have 629 as the first test for the souffle. What about Bitcoin? Here's another chart. Remove the bias out of the way and look at the chart. It looks as if BTC, Bitcoin, is bottoming. The momentum indicators are oversold and they're curling upward. The selling pressure is slowly but surely easing. The problem is, what about the migration from cryptos to meme stocks? If meme stocks continue to ride higher impulsively, some of those hoodlers in cryptos will start to feel FOMO. The grass is greener on the other side. Dump your bag in Bitcoin and chase BlackBerry and AMC or whatever. What do you know? You dump Bitcoin, you buy AMC, AMC goes down 20% and BTC rises higher. Again, what about Doge? What's going on here? Nothing. Flat, consolidating, but it is primed for a pop. The majority of selling is already over. We're waiting and waiting and waiting for a pop. What will be the catalyst for the pop? A tweet from Reverend Elon Musk. He is not tweeting, but he should, and perhaps he will announce that he sold Bitcoin, Tesla that is. Tesla sold billions of dollars worth of Bitcoin, and they're buying Doge instead. Oh boy. If that happens, Doge to the moon. Not even joking. Doge goes to $1 or more. If Reverend Elon Musk commits billions of dollars from Tesla money into Doge, will he do it? Will the fraudster, the con man of the century, do it? He should put his money where his mouth is, not just egg you and I to go buy Doge when he's not buying. So I'm waiting for Reverend Elon to announce buying Dogecoin. So I bought a little Doge, little dogs here and there, puppies. No big commitment whatsoever. But what if Reverend Elon announces that he is buying Doge? Then that will be one epic pop higher. Therefore, I am buying some Doge. And please, a disclaimer, don't follow my moves, because last time I turned bullish on Bitcoin, that was the top exactly. So proceed with caution, because I might have some ulterior motives. What about ETH, Ethereum? Looking a lot better than BTC, which was contrary to what I thought. I thought BTC is oversold. BTC should bounce higher. But ETH is the one doing a lot better technical-wise, because it went all the way, the very important support, now resistance level of 2,900 or 2,900. It failed today, but it is too early to call it a rejection. It could give it another shot tomorrow, and if ETH is successful in breaking 2,900, then we will see a significant recovery. But if it gets rejected again, that will be a reversal signal and a shorting signal. So the reaction around 2,900 is extremely important. Lastly, what about AMC, the talk of the town, breaking away from the channel and getting very close to the prior top from the first episode of the Mania, around 20.5. Will it stop there again? We will see. But again, weighing in the risk versus reward. You have an overbought condition in the RSI. And AMC reversed from the exact same position from the RSI, a little higher from the reading we have right now. So that means AMC could go a little higher. But when you weigh in the risk versus reward, you have a level from which the stock topped before, meaning this will be a very extreme resistance level. Furthermore, the RSI is getting extremely overbought, meaning the bulk of the buying, this is the assumption by the way, the bulk of the buying is done. And whatever buying that's about to come will be insignificant in dollar value, meaning that it is worth it, at least for me. I'm talking about me, I'm not talking about you, but it is worth it for me to take a shot and buy put options when I see AMC reaching 20. Matter of fact, I did not wait. I already have 2 trades against AMC. One expiring on Friday, and I talked about that one last night. It doesn't look like that one is working, but the other one is for June's expiration, and I bought the $10 puts, which is extreme, but I am playing the rise in Vega. So if I see AMC popping higher again tomorrow at the level of 20.5, I will watch the reaction. If I start to see weakness struggling to break above that level, some selling taking action as we reach the double top formation, I will start buying more puts aggressively for AMC. Moving on to the conclusion of this video, what do we have on the economic calendar tomorrow? We are getting into the juicier part of the week from a macroeconomics perspective because we have, per usual, the initial jobless claims, we have durable goods, and pending home sales. All of these are important, but perhaps the GDP revision is the important number here because it will be a signal for the trajectory of inflation. The most important day is actually Friday, so we will see what happens there. Anyhow, that's all I got for you tonight, and I will talk to you again tomorrow. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.